Hello friends, welcome to the CAIIB Central Banking Elective Maha Marathon. Hope so up till now you might have watched my revision session 1, revision session 2, revision session 3. 3 revisions I have taken last 3 days. All the important recollected questions were covered in the same. Today also I will be covering some more recollected questions. So don't miss even a single question. Focus till the end. Share it with your friends. Like this video. Subscribe to the channel. Officers Adda247 English channel. Don't miss this at all. And one thing importantly remember, share this channel. Share this with your friends so that others can also benefit. Okay. So let's begin with the Maha Marathon for Central Banking Elective for June 2025. Okay, so let's start. To raise the savings to GDP ratio to facilitate a higher level of investment necessary for breaking the vicious circle of poverty and facilitating the growth process. This task assumed a paramount attention of Reserve Bank, particularly in the absence of such a big question. See, this is a goal, and this task or this goal achieved importance when? Means because of in absence of what? Or in absence of So in absence of efficient financial intermediation, lack of depth in capital market, and prevalence of large segment of indigenous banking and all of the above. So when did this assume the importance? Everyone. And why did this assume the importance? The answer was everyone. What was the answer? The answer was all of the above. Okay, the answer is all of the above. Kindly note this. Okay, the answer is all of the above. Efficient financial intermediation, A. Lack of depth in capital market, B. Prevalence of large segment of indigenous banking, C. The earlier names of National Bank for Agriculture, name of Agriculture Bank, National Bank for Agriculture and Rural Development, NABARD, established in 1982 were, so what were the earlier names? The Agriculture Finance Corporation was established in 1963, Agriculture Refinance Development Corporation in 1974. So what was that earlier name? It was it this one, Agri Finance, or was it this one, Agri Refinance? Both were combined actually. See, these were two organizations. They were combined later. This was finance and this was refinance. Both were later combined to form NABARD. Okay. The Clearing Corporation of India, CCIL, was incorporated in 2001 to upgrade the financial infra in respect of clearing and settlement of. So what does Clearing Corporation of India do? Does it do the clearing of your checks? Name itself says clearing. What does it do? Clearing and settlement of what? Debt instruments. A is debt instruments and foreign exchange transactions. B is debt instruments, stock market and foreign exchange transactions. C is debt instruments, banking RTGS, foreign exchange transactions. D is both B and C. So what does it do? Does it do the clearing of your stock market? Or does it do the clearing of your RTGS? RTGS clearing is done by whom? It is done by RBI, NPCI. Stock market is handled by NSE, BSE and SEBI. Debt instruments and foreign exchange transactions. CCIL has these two jobs, main. debt instruments and forex. Okay. Bank reserves have been actively involved in financial institution building. Sorry, Reserve Bank, not bank reserves. Reserve Bank has been actively involved in the financial institution building. Most of the institutions were nurtured under RBI umbrella with a focused approach to. So why were most of the institutions nurtured? Means why were they allowed to prosper? RBI has many institutions. You have this in your topic also, in your studies. Allow them to become viable and independent over time. B is RBI to gradually shed these functions in order to ensure that no conflict of interest arises. C is both A and B, and D is none of the above. So, why did RBI form all these bodies or all these organizations within itself? Does RBI want to become them viable and independent over time? Or does RBI want to shed off these functions and make it independent? What is it? The answer is both A and B. Here, RBI has various bodies under it. FEDA is there, okay, plus others are there. They have to become independent. They have to work on their own. Viable and independent over time. Viable and independent over time. RBI has to gradually shed these functions in order to ensure that no conflict of interest arises. Shed these functions means it will give the function of forex management to FEDA. It will not look into it. Okay? That is the basic logic. Got it? Which of the following is true? Imperial Bank transformed into State Bank of India in 1955. 14 large banks were nationalized in 1969. 6 more banks were nationalized in 1980, and all of the above. Very easy one. Very easy. You all should be able to answer this. Very easy. All of you should be able to answer this. Yes? The answer is all of the above. Correct? The answer is all of the above. Got it? All of the above. Next. The history of central banking goes back to the 17th century when Riksbank was established as a central bank in 1668, which was recognized as the first central bank in the world. Where was the bank established? The first central bank was established as the Riksbank in 1668. My God. Where was this established? See the name also Riks. What is this Riks? Risk it should be, isn't it? It should be risk, but it was named Riks. Desktop, right? So it was, where was this established? It was established in Sweden. Okay, Sweden. It was established in Sweden. Okay. The Bank of England, known as the Old Lady of the Threadneedle Street, acted as a government's bank. Acted as a government's bank and a UK central bank. It issued banknotes, controlled the UK gold reserves, and since 1997. When was the Bank of England established? So, gold reserves. Okay. So, when was the bank established? This Threadneedle Street. When was this bank established? Bank of England. It was in when was it? The answer is 1694. 1694 this Bank of England was established. Old Lady of Threadneedle Street. Okay, kindly remember this name. Which bank is known as Old Lady of Threadneedle Street? Just now we saw this. Bank of England. Okay. Which of the following events increase the power of central bank over money supply and price stabilization at the onset of the First World War? So what gave more powers to central bank when during the time of First World War? Notes became the legal tender, coins minting reduces, government policy, all of the above. What gave the powers? More powers to central bank. What gave more powers to central bank? Yes? What gave more powers to central bank? Was it notes became the legal tender? Was it coins minting reduces? Government policy? All of the above? Many of us will think all of the above because all of them seem to be true. Answer is not this. Answer is A. Notes became the legal tender. Okay? Kindly note, as we move ahead as a human being, the cost of your currency, printing that currency, always reduces. Remember earlier old ages, you have read that history. We had gold coins. Then came copper coins, cost reducing. Right? Gold, then sometimes silver, then copper. Then we had these coins minted by many governments. Then notes. Notes is still reduction. And now CBDC. So no cost, isn't it? Got it? The First World War increased the discretionary power of central banks. Which of the following steps is the main reason for increase in the power? The First World War gave immense powers to central bank. Printing of notes, formulating monetary policy, funding to smaller banks, trade of government paper in the open market. What gave the real power during the First World War to all these central banks? What gave the real power? Real power. Now printing of notes is okay. We have studied this, but real power to central bank, real money to central bank came from what? Came from fourth, D. Trade of government paper in open market. Okay. This gave the immense power to the central bank. Now also central bank has huge power in its hand. Why? Because of this ability. Government papers, dated securities, treasury bills, it can sell. Okay. Next. Now, next 5 questions. Okay. 6 to 10. Central banks perform the role of controller of credit as well as the other important functions of central bank include. So, central bank firstly performs the role of controller of credit. Number 1. Number 2. The other important functions of central bank include banker to government, banker's bank, holding monopoly of note issue, maintenance of internal and external value of currency, facilitating the development and payment settlement system, besides undertaking other development activities. The task of promoting growth and development is an important function in the case of central banks of developing countries. Big para, questions are based on this para. 5 questions, case study it is. Accordingly, central banks have assumed functions like development of markets, institutions and communication policies. So this is a paragraph given. Based on this, you have to answer now 5 questions. Now, kindly note, whenever we say based on this, it is not that the answers will be within this. They can be different also. This is just the basic framework given to you about the central bank. So let's look at the 5 questions. First one. Which of the following factors will affect the nature and extent of the support from the central bank to the central government? So which will affect, okay? Affect the nature and extent of support from the central bank to the government. First, economic condition. Second, relationship between central bank and government. Third, constitutional provision. And fourth one, all of the above. Now, many of you are afraid of all of the above, isn't it? No, no, no. All of the above will not be true. So, you'll try to answer between A, B and C. But the real answer over here is D, all of the above. Okay, the real answer is D, all of the above. Economic conditions, relationship between central bank and government, constitutional provision, and all of the above. Okay, so support from central bank to central government. Okay, most central banks act as the agents to their respective governments and manage public debt that the governments incur in a bid to bridge the mismatches in their revenues and expenses. So most central banks act as the agents to their respective governments and manage public debt. So they'll act as the agent wherever government finds any gap between its income and expenses. Central bank will try to fill in. Okay? So public debt that the government incurs in a bid to bridge mismatches in the revenues and expenses, right? To be effective in managing the debt, which of the following policies should be in close coordination with the monetary policy? Which of the policies should be in close coordination with the monetary policy? One is fiscal policy, second is constitutional provision, third is government policy, and fourth is none of the above. So which policy should be in tandem? Tandem means close coordination, okay, with the monetary policy. Actually, it's like this. This monetary policy is always a supportive policy. Main policy is always fiscal. So monetary policy has to support the fiscal policy. Kindly note this. Monetary policy has to support the fiscal policy. It's not reverse. Fiscal policy will not support monetary policy because fiscal policy is given by government, finance ministry. That is for the whole country. That is the main objective. Monetary policy has to adjust itself to this fiscal policy. Got it? It has to adjust itself. Got this point, everyone? So the answer is fiscal. What are the tools used by central bank to neutralize the impact of monetization of public debt? Monetization of public debt. Now, what do you mean by this? Monetization of public debt. Firstly, let's look at the answers and then I'll tell you. Issuing additional debt to non-government sector, increasing the limit of CRR, sale of government securities, and all of the above. Firstly, give me the answer, then I'll give you the meaning. Yes, yes, yes. So, see, in the meantime, when you think, I'll give you the logic of this monetization of public debt. What is this? See, public debt means what? Public debt means whatever government has given to the common public. What has government given to the common public? It has given through RBI. What has it given? It has given notes. Public debt means notes. So these notes which are issued is actually a liability, isn't it? Liability on RBI as well as then in back end to the government. So if I am holding some 100 rupee note, it means I have given some loan to the government through RBI of this 100 rupees. So this loan needs to be filled in somewhere. This is the liability. So the government needs to have the asset. Simple, na? It's balance sheet, right? If this is my liability, our government's liability, issuing of notes is the liability of the government and RBI. So it needs to have the asset, equal assets to balance. What are those assets? That is the basic question. Issuing additional debt to the non-government sector, non-government, increasing the limit of CRR, sale of government securities. Now, many of you will think, sir, this is not possible, this is possible. This is the best answer. This can't be there. Already you have a loan, and again you are giving loan. The answer is all of the above. All of the above. Why? Here, giving additional debt to non-government sectors. What do you mean by this? Because of this, you earn interest. If I give it to private company, the private company will give me interest. So that will become my asset. The asset of the bank means what? In the long run, it is the asset of RBI. Every bank is, after all, what is every bank? Your bank, my bank, any bank. What is that bank? Every bank is actually the part of RBI only. RBI distributed all these banks act as the agent of RBI, isn't it, for money supply. So this becomes my asset, bank's asset. So this becomes RBI's asset, this becomes government's asset. Increasing the limit of CRR, right? If I increase the limit of CRR, RBI increases the limit of CRR, what happens? The cash flow, the flow in the society will decrease and the flow with RBI will increase. Okay? The money flow with RBI will increase. So RBI will have more cash than more assets. Sale of government securities. Now, sale of government securities means, again remember, there should be the buyer for those securities. I'll sell, but if there's no one to buy, then what? I'll sell everything, but there's no one to buy. So, whenever you are selling any government security, there should be a buyer first. The answer is all of the above. Got it? The dash emphasizes the need for adoption of fiscal and monetary transparency by authorities. The dash emphasizes. Who emphasizes? Transparency by the authorities means World Bank, RBI, IMF, Federal Bank of US. Means who tells the world that your financial institutions, means RBI, central banks, should be independent? Who tells? Is it told by World Bank or RBI or IMF or Federal Bank? Forget it. See, this Federal Bank is out. RBI is also here. We are talking of world over here. RBI will not control the world. Either World Bank or IMF. Nothing. I have given you the hint. Yes. Many of us confuse this World Bank and IMF. See, this World Bank is a bank. It is not the authority. World Bank is just a lending bank, a normal bank, lending to various projects. Various good projects are there, roads, we see many boards in our state somewhere in association with World Bank that finance is given. So that is just a lending bank. That is not an authority. IMF is the authority, International Monetary Fund. This fund, this IMF, controls various central banks also. They can give the directions to central banks. Okay, of course, they don't give the direct directions. They give it as a suggestions, isn't it? Which of the following countries adopted the Autonomous Debt Management Office for operational efficiency? Autonomous, kindly note this word, Autonomous Debt Management Office means their debt management is not handled by the central bank. It is an autonomous body. Okay, autonomous. Which is that? Australia, Germany, France and USA. The answer is Germany. Okay, Germany. Do you know one important part about Germany? You will have this question also. There, the bank is called as Bundesbank. Bundes. Okay. Do you know one important fact about this Bundesbank? This Bundesbank has got more powers in Germany than the government. Bundesbank. In our country, what is the case? Government has more power. RBI doesn't have that much powers. Okay, that many powers RBI is not having. If tomorrow government wants, government can take over the RBI. Simple logic. But here, Bandez Bank has more powers than the government. It's a fact. Okay. So that's why they have this autonomous debt management office. Which functions form the core of central bank's operations? Core. What is the important part of central bank's job? What is the main role of central bank? Why should the RBI exist? Is it fiscal policy? Is it monetary policy? Is it banker's bank? Is it lender of last resort? What is it? Fiscal policy? Is it of central bank? It is, just now we discussed, it's of government. So this is out. Core function. Core, what is the main role? Price stability is the main role. Why should RBI exist? From the common man's perspective, you go on the road, ask anyone. Now, what will he be concerned about? He or she. He or she will be concerned about two aspects. One is price stability, means inflation, right? Inflation. He or she will be concerned about inflation, number one. Number two, jobs. Right? Jobs means GDP basically. Jobs equals to GDP. If GDP grows, then only jobs will grow. So what is the core function of any central bank? These two, growth and inflation. They have to mark the balance between the two. How do they make the balance between the two? They do it through monetary policy. Okay? Which of the following practices enhance transparency of achieving greater accountability? So which will give greater accountability to RBI? Accountability means what? Responsibility. Asking, answerability. You answer. Why did the inflation go above 6%? Accountability. Publication of official reports. Publication of forecast of key variables. Reason for central bank decisions, and all of the above. Many of you are afraid of this all of the above now, right? Many of you are afraid that no, all of the above. Not true. But the answer is all of the above. Okay? Publication of official reports. See, this will give an accountability to RBI. Suppose if RBI tomorrow prints a wrong report about GDP, who will trust RBI in the next report then? Right? Publication of forecast means if RBI says, we feel that the economy will go this way, we feel, and nothing happens. Who will trust RBI from next time? Reasons for central bank decisions, isn't it? RBI reduces the repo rate and it goes wrong. People will say, what is this? Isn't it? So that's why all of the above. Which of the following is a secondary objective of central bank? Secondary. Primary is that price stability and growth. What is the secondary objective? Public debt management, price stability, transparency, and economic growth. What is the secondary objective? Yeah. Say this. First, we already saw price stability, gone. So that is primary. Growth, gone. Primary. This is primary. This is primary. So now only two remain. Public debt management and transparency. So public debt management is a job. Okay. It's not an objective. It is a daily job. Transparency is the objective. You have to be transparent. Two things are very common and very important. Transparency and accountability. Both the things should go hand in hand. Right? So the answer is transparency. Read this. Transparency in this case could be defined as the absence of asymmetric information between the monetary policy makers and other economic agents with a view to reducing uncertainty. So transparency is why. Why does transparency exist? Transparency exists because it should pass on the information to the common public from RBI. It should pass on the information, whatever is happening in RBI. Of course, not the secret matters or the serious matters which are not concerned with the common public.